Hello, and welcome to analysis session. So this is going to be this week's analysis session. What am I going to be looking at specifically? And I usually don't like trading Mondays because of my strategy, but I like to build a foundation of what I'm going to do for the entire week. Technically, what I'm trying to say is for every minute you spend planning, you save 10 minutes executing. When you plan your trades, you trade your plans, and you're going to have much better psychology in general. It all starts with Forex Factory for me. Looking at what are we anticipating in the economic calendar. Today, there's not a lot of activity happening in the financial markets. We do have bank holiday for Canada. Starting tomorrow, it's going to be different because we do have the 1 year loan prime rate and the 5 year loan prime rate for the Chinese yuan. Very interesting, and I would want to see what the data is going to entail. I would want to trade the Reserve Bank of Australia monetary policy, whereby we do anticipate these people to lower the interest rates from where it is 410 to 385. So basically a 25 basis points deduction, which is quite interesting. Looking at what institutions are doing, looking at what central banks are doing, all of the economies currently at the moment are cutting interest rates. And this is something that I want to really pay attention to, whereby it does weaken the economy, but at the same time, it strengthens people's jobs, whereby the central bank is telling people, it's telling you, go take out loans. Loans are going to be much cheaper. Instead of paying 4.10%, you just need to pay 3.85%. What this does, it stimulates the economy, brings money into people's pockets, invest, start businesses, build yourselves. And then in the near future, they hike interest rates again. Now, moving over to 330, we are going to have CPI for the Canadian dollar. We don't anticipate quite a difference, and I'll learn to also see what these numbers are going to hold out in. So for me tomorrow, Australian dollar and Canadian dollar are going to be something to really look out for. On Wednesday, we do have CPI for the British pound. We do anticipate inflation to pick up slightly. I would want to be focusing more on the year-on-year release for the core CPI, whereby we do anticipate the numbers picking up slightly at 3.6%. Now, remember the central banks want these numbers below 2% for them to call inflation at a stable rate, okay? But that's a theoretical number, and it's going to take some time to reach that place. We do have G7 meetings, that are going to be continuing. It's going to be day two, Thursday, French flash manufacturing PMI, then it usually follows each other. So it's usually Europe, France, then Germany, and then later on, 30 minutes later, we do have for the British pound. So it's going to be a very active day on Thursday, May 22nd for the Eurozone, specifically Euro and British pound later on in the day. We do have unemployment claims. Now, this is usually a very interesting data to be looking at. Yes, some people can term it as lagging data because if you lose a job today, it's going to take some time for you to be broke. But it's usually very interesting to note the patterns. If more people are losing jobs, job market right now in the US, as per the data, is stable. It's strong. Looking at non-farm payroll data that came out recently, that was back on 2nd of this month, we did see job numbers actually coming out better than forecast. So the job market is strengthening in the United States as per the data. Yeah? But we want to keep a look at what are the trends that are going to be in the near future. At 4:45, this is local East African time. So this is UTC plus 3. We are going to have flash manufacturing PMI for the United States, which is usually a forward looking indicator when you're looking at the financial markets. Then on Friday, we are going to conclude by retail sales for the British pound and retail sales for the Canadian dollar. I want to focus on new home sales. This is something that I want to pay very close attention to, especially after last week's numbers did come out really good in terms of new home sales, whereby we are targeting 696,000. Now, Joe, whenever people are buying houses, it usually creates a ripple effect. It creates a domino effect because more people are going to pay mortgages. There's going to be construction workers. There's a lot of things as a result of someone purchasing a home. Very interesting to note out in the financial markets. Now, that's going to be for the economic calendar. Basically, what we can learn about this is we don't have anything that is going to be pierce the resistance in terms of the economic calendar, but I want us to go over the commitment of traders, starting off with metals, commodities. We are going to look into the short format for the futures only. Now, I want us to start with silver. We want to pay attention to managed money on the long and short positions that they do have. So currently at the moment, we have almost 43,522 long positions and 15,189 short positions. But we want to focus on the changes. This is where it gets interesting. This is where it gets really interesting. So from May 6th to 13th May, we did see, so that was from 6th. Remember, this is lagging data, but it's worth it to pay attention because these are people who move the market and you want to look at the patterns. It's the rhythm within the noise. And to decipher the rhythm within the noise, you have to look at a lot of noise. So this is some of the noise. So from 6th to 13th of this month, we did see almost 84 positions being offloaded from longs and 1,465 positions being added to shorts, meaning institutions are going to favor more selling opportunities on silver. Moving over to gold, this is where things get interesting. 27 positions only being added. If you look at the net long positions, 144,000, which is quite long. Net long positions are really high, but for the changes, we want to look at these. Look at these. So from 6th May to 13th May, we did see 891 positions being added to shorts, meaning institutions are favoring shorting opportunities. Now, if I was to pick up a chart of gold, for purposes of illustration here, let me go to the 1 hour time frame. So I'm looking at an opportunity currently at the moment, and it looks like, okay, so from 6th, where is 6th, darling? So from 6th, somewhere around this region. So from 6th to 13th, we did see quite an amount of positions being offloaded. And if you look at this chart, you can tell that, yes, we were quite in a down trend for the few trading. Actually, it's a whole trading week. When you look at it from Tuesday to Tuesday, we did see institutions offloading positions. Now, if institutions, this is how you interpret this data. If institutions are offloading positions, it means that you also need to look, you need to position yourself also towards the selling opportunities. So this is how you look at commitment of traders. It's just a data to back up your thesis. Whenever you're looking at selling opportunities, look at the commitment of traders. How are institutions pushing money in that specific economy? Let's go over to the financials and you're going to deal with futures. Yes, you can deal with futures and options. The reason why I choose futures is because you have to be obligated to sell when the time expires. With options, you are not obligated. It's not a must. And that can, it's very subjective. Looking at Canadian dollar, so this is the Chicago Mercantile Exchange. We want to look at asset managers, institutions. We don't want to look at non-commercials. So actually, we want to look at non-commercials, not the commercials. We can see that generally we have 36,000 long positions and 104,000 short positions. Interesting. You can see that we did add almost, I like using the term we because whenever you're trading as a smart trader, you have to see yourself as a smart trader. So we did add 9,000 positions to shorts, while at the same time offloading 3,000 positions from longs. So if we look at an asset of USD Canadian dollar, from 6th, somewhere around this region, to 13th, we did see quite the amount being added to short positions. So institutions were selling Canadian dollar. So if institutions are selling Canadian dollar, you anticipate prices to rally to the upper side. And this is what we saw happening in the financial markets. So this is a breather. Remember, prices moves in impulses and corrections. So this is what the market is going to do for the next push. Maybe this was just an impulse and then a correction. Maybe we are anticipating the next impulse very soon. So as per the commitment of traders, institutions are favoring offloading more short opportunities. They are adding more short opportunities, but at the same time, they are offloading long opportunities. So they are covering their long positions, but at the same time, adding more short positions, weakening the Canadian dollar. Moving over to the Swiss franc, 8,000 net long, 33,000 net short, almost similar positions of longs and shorts being added to the financial markets, but net long, they are really short on the market. So USD Swiss franc, overall they're net long, and we can see prices of USD Swiss franc currently picking up from lows that we did have. So institutions could start offloading these positions because the United States dollar, and this is just my opinion, I do believe in the next few weeks, the United States dollar is going to be slightly stronger in the financial markets. Let's continue with our data. GBP, or the British pound. Net long, 60,000. Net short, 65,000. Interesting thing to note, more longs were offloaded. Going back to the chart, where are you GBP USD, darling? Hey, interesting facts to see from 6th to 13th. So from around this region to this region, okay, we did see quite the amount being offloaded on long positions, but this is going to hang in the limbo. Looking at price action today, whereby it did open, this was quite massive. Gold did make the retracement to the gap that opened. So I'll want to see British pound what it's going to do. So the last currency we are going to look at is the Japanese yen on the commitment of traders, whereby 124,000 net long positions. This is one of the highest net long positions you have in the financial markets, apart from the euro. Euro is quite significant. Euro has 432,000 net long positions, but at the same time, it has quite significant net short positions. Looking at changes, 4,000 being added to longs, 500 being added to shorts, meaning institutions are still favoring the euro as a safer haven, and they have more contracts on that end. But looking at Japanese yen, look at this. Almost 10,000 positions being offloaded, but 6,000 positions being added to shorts. So looking at USD JPY, could this be a retracement for a push further to the upside? Let me remove this. Could this be an opportunity for prices of USD Japanese yen to continue pushing to the upside? We do have relatively equal lows that have been broken. Okay, I didn't see this. Actually, we might just enter a position on USD JPY right now. I really like this strategy. Now, this is a strategy. I don't like, I'm sorry, I don't show this strategy often, but this is the strategy. Whenever you see equal lows in the market, so this is a clear raid on the lows, prices are rejecting these. Okay. These are 30. Let's say if you have a 40 pip stop, let's say a 50 pip stop loss, targeting 306, 350, that's a risk to reward ratio of nearly 1:7. Quite interesting. I'm going to enter this position at the moment. Yeah. So a 50 pip stop loss. A 0.1 is going to be $50. Eh? So this is the opportunity that I'm currently waiting on gold. But as we wait for that, I'm going to add USD JPY. Beautiful price action. I like the way things are moving. So this is a clear raid of liquidity. Liquidity has been raided. A 0.1 is going to be $50. So $50 targeting 315 return. What if we risk 100 to get 700? Yeah, so we are going to risk. Yeah, so it's going to be 100 to target 700. $100 to target 500. So I'm looking at it on the H4 time frame. Okay, 100 to target 450. That's quite decent. That's quite decent. Where did I get the 700 from? or it was a risk to reward ratio of 1:7. Yeah, so this is the opportunity. Let me take a screenshot of this. Let me take a screenshot of this opportunity. So this is a live opportunity being taken live. So stop loss is going to be 144.28, 144.28, and then bottom is going to be just to the highs, 144.28. So there we have it. It's a risk to reward ratio of 1:5, whereby I'm risking $100 to target slightly below $500. Quite decent. Let's see what's going to happen to that. But my eyes are going to be on gold. I want to look at this opportunity, and I don't like if it's going to leave me. I'm going to cry. I'm going to shed a tear. But this is what I'm going to be looking at on this opportunity. So I do have a Fibonacci from this high to this low, and this is the thesis. Yeah, we did see, and this is something. Let me address it. So Woody credit rating. Okay, so this is something that we did see, and it's the rhythm within the noise. This is just noise. So apparently, Moody has downgraded the United States debt on Friday, which was last Friday, stripping the country of its last perfect credit rating. The move could rattle financial markets and push up interest rates, potentially creating additional blah 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 yada yada yada. Now, I'm looking at the United States dollar being stronger in the next few weeks, and I'm willing to put my money on that. I'm willing to put my money on long opportunities on the United States dollar. So this is the opportunity that I'm looking at. If you look at it on the H1 time frame, if you look at it on the higher time frames like the H4, the daily, you get a different perspective. For me personally, I usually focus on the 1 hour time frame. Looking at this, we have been clearly in a downtrend. The bears have been in control of these markets, and I want to look at this opportunity as more selling opportunities to the downside. Why? Because if I take a Fibonacci from this high to this low, prices are in between the golden region, and I do have my entries. As you can see here, I am not yet currently being tagged in. So as you can see, I do have my opportunity also on this one. So for this one, I'm risking like $220 to target almost $1,500. Quite decent to be executing on this account of mine. Whereby if these two positions are going to hit my take profit, well and good. We're good for the week. But the question begs. So once again, Fibonacci, 50%, 61.8 entry, sell limit above this high. Looking at prices to take out, I don't know why, but I have a good feeling about $3,000 announced in the next few trading weeks. So it might take some time. It might take some time. If you look at this from this high to this low, it took almost 8 day, 11 hours. So I'm looking at before the not even I don't want to put a time limit to it, but before next month, yeah, before next month, there's a possibility we might see gold going back to 3,000. If you look at it on the H4 time frame, 3,000 was quite the price point for gold, whereby broke to the upper side, created all-time highs back then, retraced and then lingered around the $3,000 announced for quite some time before further making the push to the upper side. Let me remove these lines. I do believe I really like the session breaks. Where is it? In my glasses. Okay. So if I remove my session breaks, I want 3,000. Yeah, 3,000 is what I'm really eyeing for. So yeah, whereby we did break to the upper side quite significantly, prices came back down. This region here, I want to see prices of gold doing the same thing over the next few trading weeks, whereby as you can see, we do have a change in state of delivery already, whereby these lows broke this most recent close, closed below, had a retracement. These highs failed to break these highs, and then the second leg that formed broke the most recent lows. Now, if we do respect this region of resistance around this region, if we do respect 3250, I am looking at selling opportunities further to the downside. So I'm going to be looking at two opportunities, gold and USD JPY, whereby I've shown you the two opportunities that we are going to be looking at. So these are the two opportunities that I'm looking at currently at the moment on USD JPY and gold. Let's see how it's going to be. That's going to be it for me. I don't believe I have anything else to say. So that's going to be it. Take care of yourselves. May God protect you. May enemies respect you. May death neglect you and your families.